Good afternoon, everyone. This is Judge Stanley speaking. I'm going to repeat that every time that I speak. I'm also going to ask some things of the participants today. During today's hearing, OTA requests that you please always say your name before you speak. This is especially important since our appellate doesn't have any more than an audio connection, so he can't see who's speaking. We also ask that you do not use the chat feature in Webex because that won't be able to be seen by the appellant. I'm going to ask that you please mute your microphone when you're not speaking to avoid feedback and background noise. And please note that the proceedings are being broadcast live and any information shared on the screen is going to be publicly viewable. OTA, the Office of Tax Appeals, is independent of the tax agency, the CDTFA. We will only have, in order to decide your case, Mr. Sharma, we will only have what has been entered into the record of the Office of Tax Appeals, so for this appeal. As I noted in the pre-hearing conference, the two panel members have replaced two other panel members. Judges Andrew Wong and Daniel Cho are replacing the panel members that were noticed. Nobody voiced an objection to either of them. I'll be the lead judge for the process of conducting this hearing. We are co-equal decision makers when we decide the appeal. Ms. Lopez has already called the roll, so I will skip party introductions. I want to confirm a couple of things before we go on the record, that the issues remain the same as we discussed at the pre-hearing conference. That appellant has shown it is entitled to a reduction, appellant has shown he is entitled to a reduction in the unreported taxable sales for the audit period January 1st, 2011 through December 31st, 2015 audit period. Is that accurate, Mr. Sharma?
Yes.
And Mr. Suazo?
Yes, this is Mr. Suazo. That's accurate.
Okay, and then there's an additional issue of whether appellant has shown that he's entitled to a reduction in the unreported cost of self-consumed taxable merchandise. Is that correct, Mr. Sharma?
Sharma, yes.
And Mr. Suazo?
On the reduction of taxable merchandise, I thought he wanted an increase so that it would offset the sales, the taxable sales.
Oh, you're right. He would want an increase in that, not a reduction. Thank you for pointing that out. When I go on the record, I'll have to make that notation as well. Did you understand what Mr. Suazo said, Mr. Sharma?
Sharma, yes.
Okay. For the exhibits, Mr. Sharma has not submitted any evidence on appeal and did not object to CDTFA's exhibits A through E, which when we go on the record will be admitted into evidence. And as far as witnesses today, Mr. Sharma has indicated he will be the only witness. So when we go on the record, we'll start with Mr. Sharma's sworn presentation, and then we will go to CDTFA's presentation. And as we discussed, Mr. Sharma, you will be able to have the last say in the matter. Does anybody have any questions before we go on the record? Mr. Sharma?
Sharma, no.
Mr. Suazo?
No questions, Your Honor.
Okay, then let's go on the record. And this is the appeal of Devanand Sharma, case number 19105356. The date is July 21st, and the time is now 3:54 p.m. The location, the hearing was scheduled for Cerritos, California initially, but it is being conducted electronically from several different locations. The judges for this matter are myself, Judge Teresa Stanley, Judge Andrew Wong, and Judge Daniel Cho. Please identify yourselves for the record, and I'm going to start with you, Mr. Sharma.
Devin and Sharma.
And CDTFA.
Randy Suazo, hearing representative.
Jason Parker, hearing representative.
Kevin Smith from the legal department of CDTFA.
Thank you. And if you heard that feedback, this is Judge Stanley again. If you heard that feedback, you'll realize that I made the mistake of not muting my microphone while other people were talking, and it causes that feedback. So I apologize for that. And it's a good reminder for all of us to do that. Okay. We're going to admit exhibits into the record at this time. CDTFA's exhibits A through E will be admitted into evidence without objection. Appellant has not presented any any exhibits to be admitted. The issues. Okay, hang on one second. I have been introducing the wrong judge. Daniel Cho did not replace one of the panel judges. In fact, it was Judge Dang who replaced the one of the other panel members that was noticed. And I apologize for that, Judge Dang. But he is the one who's on this with so it's myself, Teresa Stanley, Judge Wong, and Judge Dang. So back to restating the issues. As the issue one is whether appellant has shown that he's entitled to a reduction in the unreported taxable sales for the January 1st, 2011 through December 31st, 2015 audit period. And the second is whether appellant has shown that he's entitled to an increase in the unreported cost of self-consumed taxable merchandise. Is that correct, Mr. Sharma?
Sharma, yes.
And Mr. Suazo?
Yes.
Okay, and I did indicate, and we discussed at the pre-hearing conference, that pursuant to CDTFA's decision in this matter, they have agreed to delete the negligence penalty. Is that correct, Mr. Suazo?
That's correct, Your Honor.
Okay. Moving on, because there's only one witness today, we are going to dispense with opening statements and move directly to testimony. Mr. Sharma, I cannot see you, but I'm going to ask you to raise your right hand. And have you done so?
Yes, I have.
Thank you. Do you solemnly swear or affirm to tell the truth, the whole truth, and nothing but the truth in this matter?
I do.
Okay. I've given you 15 minutes, which you said was more than you need, but take the time if you'd like, and you can proceed with presenting your case to the panel.
Okay, shall I proceed?
Yes, please.
Okay, it's Sharma, Devin and Sharma. And I believe, and I've tried to convey this to many bodies of people that I spoke with, this has gone on for many years. I have a restaurant within a hotel, and it produces certain revenue, but it also does not produce certain revenue because of we don't charge for it. And so we filed our papers, and I don't know what was done wrong, but it brought us to this place, this day today. We have filed our papers correctly since then, whereby we declare whatever it is that we collected and then file our quarterlies. Now, the amounts that have been asked for over those years, for the period that's in question today, is many folds larger than what the reality is, or was now looking back. And it was an error on my part, I suppose. In the end, I must take responsibility for all. But whatever it was, there was something wrong. I still, to this day, do not understand what was wrong. And I'm going to leave it alone. I hope that it's corrected to what it should be, and it should be in line with what followed those dates, which would be the current before the COVID. Since then, we've been closed and out of business, basically, for quite a few months. But prior to that date, let's say December of last year and previous, we've been filing, and the year before, and the year before, and the year before, and so on. It's not as though we wake up in the morning to falsify things. Somewhere there's a mistake, and I've expressed this in this way. If there was money, I could hire a law firm, but our company is not that strong. But in any event, that's in conclusion, I thank everyone for your time, and that's about all I can explain. Thank you.
Thank you, Mr. Sharma. Mr. Suazo, does CDTFA have any questions for the witness?
No, Your Honor.
Judge Wong, do you have any questions?
This is Judge Wong. I did have one question. Appellant claims they gave away about 75% of his food. Is that correct, Appellant?
Food and beverage. We also give them a refrigerator that's in their room, and they have different drinks that they can have, and we don't charge for that. Like whiskey,
this is Judge Wong.
Beer, wine, that sort of thing. And then same with our bar. And usually your beverage volume is greater than your food volume. And in our case, I think it is. And but we were trying to be a copycat of Embassy Suites. And we still are, though. We even got challenged with threats of litigation by some companies, but that's all we're doing, and we're still doing it. And we didn't collect the money. We didn't charge people. And the way that the agency that we are talking to now determined what we should have been paying is based upon, because we only buy from Cisco Foods, U.S. Foods, Young's Market. We cannot go to a liquor store and buy something, and it's all recorded. So we did everything honestly is what we did. But we were not collecting the tax on it because that wasn't our purpose for the purchase. Very much we give away water in the rooms, and we don't collect anything for it. It's sort of a package of your stay.
This is Judge Wong. So how does your business make money? Do you have a relationship with the hotel, or do you have an ownership interest in the hotel?
No. The hotel would give me free rent there and also promote my restaurant so people come and eat and drink on their own. Also, people paid, but the percentage was lower than the total that we sold and it worked out okay for years, for 50 years now. We've been together at the same hotel and the same restaurant and bars. There's more than one bar there outside, and the Tiki Bar, and then there's another bar called Room 66 Bar, and then you have the lounge bar, which is inside, adjacent to the restaurant. But we've just done this for 50 years now. And we started off in our 20s, and I'm in my 70s now. But that's all we've been doing, nothing different. And we've been successful enough to pay our bills, and the hotel, I'm sure, I don't run their affairs, but the restaurant has been able to. Normally, a restaurant like that costs you maybe $10,000 a month to lease it. And they waived that for us and made it easy. It just worked for us. I don't know if it made it easy, but it worked for us all these years. And here we got caught up in this period of time that we're speaking of. And I don't have any answers. All I can say is, you know, we didn't do anything wrong, except the figures are wrong based upon determining that whatever you bought from these food purveyors is times so much, and that is how much your gross revenue should be. Not in every case. We're saying ours is unusual in that sense. And for that reason, we didn't pay our tax. And that's why the government is after us. But we didn't do anything malicious or any different than we did before or since.
This is Judge Wong. I have no further questions at this time. Thank you.
Thank you, sir.
Thank you, Judge Wong. Judge Dang, do you have any questions?
This is Judge Dang. I don't have any questions. Thank you.
Okay, if there are no questions, then we'll turn it over to CDTFA to do their presentation.
Hi, this is Randy Suazo. The appellant is a sole proprietorship and operates the American Bar and Grill, which is a bar and restaurant adjacent to the Tradewinds Hotel in Englewood. The seller's permit start date is October 12, 2011. The appellant also runs a second bar by the hotel pool that is reported under the same seller's permit. The appellant is a 50% owner of LA Adventurers All Suite Hotel, LLC, which operates the hotel and other rental properties. The appellant leases a restaurant space from the LLC. The restaurant is a dine-in facility serving American-style food with a full-service bar. The restaurant is open from 7 a.m. to 11 a.m. and again from 6:30 p.m. to 10 p.m. The pool location is open from 11 a.m. to 4 p.m. The department performed an audit for the period from January 1st, 2013 to December 31st, 2015. The appellant's reported sales range between $1,000 to $2,200 per quarter. The 12-quarter average was just $1,333 in sales per quarter, or only $15 a day. Federal income tax returns, profit and loss statements, general and subsidiary ledgers were not provided. Purchase invoices were also not provided. POS system summary reports were provided after the initial audit was processed. However, the detail to the reports was never provided. Only the appellant's primary banking account bank statements were provided after the initial audit was concluded. The appellant has 12 bank accounts. Due to the lack of records, the department surveyed commonly known beer and liquor suppliers to establish purchases for bar sales. The department also surveyed 2 restaurant vendors to establish food purchases for restaurant sales. It should be noted that other major vendors such as Coca-Cola, Pepsi, Gallo Wines, etc. were not surveyed and thus not included in the audited purchase amounts for either the bar or the restaurant. The information obtained from the vendors was summarized and segregated between bar and restaurant purchases. A 20% reduction in purchases was made as the appellant claimed that they gave away both food and alcohol to guests of the hotel. Reductions of 2% each were also made for self-consumption and pilferage. Since no detailed invoices were provided, a shelf test could not be performed. A 400% industry average markup for beer and alcohol and a 200% industry average markup for food were used. The estimated markups were based on the department's experience of auditing similar businesses and was considered reasonable for the appellant's business during the audit period. Exhibit D, page 37 and 38. The adjusted food purchases were combined with the industry average markup factor to arrive at taxable food sales of $576,167 for 2013, $650,884 for 2014, and $522,214 for 2015. Total restaurant sales for the audit period was $1,749,265 for the audit period. The beer and liquor purchases were also combined with their industry average markup factor to arrive at bar sales of $199,272 for 2013, $298,799 for 2014, and $345,424 for 2015. Total bar sales amounted to $843,495. Exhibit D, page 37. The audited combined bar and food sales for the audit period was $2,592,761. When compared to the reported sales of only $16,000 for the audit period, the difference in taxable sales was $2,576,761, an overall percentage of error over 16,000%. In addition to the unreported taxable sales, the 20% reduction of bar purchases accounting for champagne that the appellant claims was given away was assessed at cost, which totaled $43,914 for the audit period. Exhibit D, page 41. The department decided not to include the $3,513 for cost of alcohol self-consumed in measure, as it was considered immaterial. Additional information provided during the re-audit: the bank deposits for the primary account only were scheduled, as the 11 other accounts were not included. The one bank account analysis, which was incomplete and contained only 27 of 36 months, disclosed a taxable measure difference of over $500,000. Exhibit D, page 43 and 40 to 45. The appellant's POS summaries were scheduled and showed a substantial difference from what was reported. The recorded sales tax collected per the POS reports totaled $42,732. The appellant reported only $1,522 in sales tax for the entire audit period. The differences were consistent and averaged over $1,000 in sales tax per month. Net sales for the POS system totaled over $1.2 million. Exhibit A, page 13, and in the DNR. The appellant is requesting a 75% reduction be made to food purchases and 75% reduction be made for bar purchases for items given to hotel guests. Complimentary food provided by the appellant is shown in Exhibit D, page 53. First set of complimentary food is a muffin for breakfast with coffee or juice provided from 7 a.m. to 11 a.m., a 4-hour window. Cookies with coffee or tea from 3 p.m. to 4 p.m., a 1-hour window. Appetizers consisting of fries, chips, and fruit from 6:30 p.m. to 7 p.m., a 30-minute window. Champagne only from 6 p.m. to 7 p.m. In order to obtain the champagne, you do need to have a voucher to give it to the bar. That's only a 1-hour window. Cake from 8 to 8:30 p.m., 30-minute window. The auditor visited the location on May 11th and again on June 8th, 2017. Based on the visits, the auditor and supervisor allowed a 20% reduction in purchases of food. Complimentary food allowance for 2013 was $49,994. Complimentary food allowed in 2014, $56,477. And complimentary food for 2015, $45,320 or $312, for a total in the audit period. Complimentary food allowed $151,783 at cost. based on the type of food provided to the guest and the timeframes allotted for guests to receive complimentary meals, the 20% allowance given by the department is more than reasonable. The appellant has not provided any further reductions to support an increase to the food allowance already provided. Review of Young's Market vendor survey report did contain description of items to be purchased. A review of the report disclosed very minimal champagne purchases. Again, champagne is what he stated during the audit he was giving away. If you want to see this, it's on Exhibit E, pages 139 to 192. Almost all purchases from this vendor are of liquor. Young's Market accounts for $83,036 worth of bar purchases. Southern Wines and Spirits, the other liquor supplier, did not have a description of what was purchased, only the amounts purchased, which were $32,214 for the audit period. The three other bar purchase vendors, Ace, Mission, and Harbor Distributing, are beer vendors, so champagne would normally not be made from these suppliers. The three combined for a total of $104,319 in bar purchases. A review of Ace, who did have a description of items purchased, showed no champagne purchases. Exhibit E, pages 86 through 89, or 86 through 90. Complimentary champagne for the audit period was allowed at $43,913. Based on the above analysis, a 20% allowance in the bar purchases is overstated. The appellant has not provided any further documentation to support an increase to the alcohol allowance already provided. The appellant has stated in their opening brief that liquor and beer may have been stolen by employees prior to being sold. No documentation has been provided to support this contention. This concludes my presentation. I'm available to answer any questions you may have.
Thank you. This is Judge Stanley. Just one little thing before I ask if the panel has questions. You referred to an exhibit as a DNR. Would you please explain that for appellants?
Decision recommendation, Exhibit A.
Thank you.
Sorry.
Judge Wong, do you have any questions?
I have one question for CDTFA regarding the 20% allowance for food and beverages. CDTFA formulated that based on auditing similar businesses. Is that correct?
Based on the type of food that was given away at this location and the time frame windows that are allowed, basically you're just getting a muffin. You're not getting any other breakfast other than juice and a drink and a coffee. On the cookies, all you're getting is a cookie with coffee and tea if you wish to have it. How many people would actually consume it is unknown. The appetizers, based on Yelp and based on the auditor's visit, was French fries, chips, and fruit. And it's only a 30-minute window to go from, I believe it was 6:30 to 7. So how many people would actually go to a complimentary meal at that time frame is unknown. And then again, for the cake, it's from 8 to 8:30. Again, it's only a half-hour window. On the alcohol, when they were initially doing this audit, it was stated that champagne was being given away. Based on the review of the Young's Market, there is minimal, very minimal champagne being purchased from Young's Market. I couldn't tell if there's any champagne being purchased from Southern Wines because it didn't have a description. And as we said, Gallo, who might have been one of the distributors giving away wine, was not included in this computation. The beer vendors would not be selling wine to the bar and restaurant.
This is Judge Wong. Okay, thank you. No further questions.
Thank you. Judge Dang, do you have any questions?
This is Judge Dang. I do not have any questions. Thank you.
Okay, this is Judge Stanley. Mr. Sharma, I'm going to give you 5 minutes if you want to respond to what the CDTFA has said in their presentation. You may proceed.
Sharma, yes, thank you. Not really. It was right to the point. It was very thorough, his presentation. Other than that, I just hope the best will come out of this. Thank you.
Okay, at this time, I'm going to close the record in this case, and it's submitted for a decision. At the conclusion of the hearing, the panel will meet and discuss the case, and Mr. Sharma, you will have a written decision within 100 days of today. And because there are no other hearings after this one, I'm going to adjourn for the day. Thank you all for participating.
Thank you, Jan.